Hey, this is Piche, the fruitful investor and your investing coach. And today we got another episode of Property of the Week. And today's property is actually a duplex on Huber Street in Kitchener. And it's a really high-end duplex. It was actually built, I think, less than 5 years ago. So it's got the 9-foot ceilings, California ceilings, brand new floors, brand new everything. All the utilities are split, which is really great. Like all of them, water, hydro, and gas. So it's really good for the turnkey investor who wants something new, something to just kick their feet up and let the money ride. So we're going to talk about the 3 things that we look for in a property before we invest. So we always want to make sure that the area is good, right? The area is the most important. That's something we can't change. So let's start with schools. Whenever you look at a property, you always want to see if there's schools around it. So in this case, there's actually a high school, St. Mary's. It's about 10 to 15 minute bus ride, and again, Fairview Mall is like a 5-minute walk or so the kids can easily walk there and get their bus to school. There's a couple of elementary schools in the area as well, Catholic and public, so it's exactly what we're looking for, so that one gets a check mark. Amenities, again, this is right on pretty much Fairview Road, and Fairview Road in Kitchener has pretty much every amenity you're going to need, from gyms, grocery stores, banks, other little boutique stores, so it's got everything within easily a 5-minute walk to 5-minute drive, 10-minute drive to other things. And again, the third thing we're looking for, and one of the most important as it pertains to Kitchener-Waterloo and Cambridge, because everybody here drives cars, is highway access. How long does it take to get to highway access from the property we're looking at? In this case, the expressway is about, again, a 5-minute drive to the expressway, which leads directly to the 401. So you get the check mark in all the 3 major things that I look for properties for clients and my partners. It checks them all off. So that passes the first test. Second test, the most important test, we're going to get to the numbers. And I know you guys are dying to see this part. I'm excited to show you. Just trying to wipe this off as fast as I can. I know your time is valuable, and I appreciate you checking out Property of the Week. Alright, get my notes here for the numbers. So let's start with the buying cost of this property. So first we got price, which is $429,900, which is a little higher than what we're normally seeing for duplexes, but again, this is brand new and it's already rented out. Down payment, so 20% down on $429,000 is $85,980. So it's a good thing you get to see this process. This is how I run numbers for clients and partners. So you get to see exactly how sophisticated investors budget for the properties, which is a good thing. Renovation cost for this property is 0 because it's turnkey. Tenants are already in. Got closing cost, average $13.75 is what my lawyer charges. Land transfer, what we got here, $5,073. Inspection, $500. Sleep at night fund, which I'll come back to, is 1 month's rent, so $2,400. Each unit is rented for $1,200 up and down. So the total for this property, to buy this property, is $95,328. Okay? So let's go through these numbers. Again, we got the price, 20% of that price, 20% down payment, right? Typical. $85,980. Renovation 0 because it's already turnkey. Closing cost $13.75. That's average. Land transfer tax $5,073. Inspection $500. Sleep at night fund. So what's a sleep at night fund? You might be wondering, what the heck is that? When you buy a property, it's always a good idea to put 1 month's rent aside in your property's bank account, right? Because every property we have has a bank account in case of emergencies. So that's exactly what it means. You're putting 1 month's rent aside in there in case the taps break, in case a tenant turnover in a couple of years or whatever, a couple of months, there's a month gap layover. So you have the money there. You're not freaking out at night. You're not asking your joint venture partner for more money, which kind of looks stupid sometimes. You have the money in there because you did it right at the beginning. So that's crucial. That's a good tip that a lot of investors don't use. So all these numbers together, even with the sleep at night fund, $95,328. So that's the cost of the property. Let's go to the monthly payments which is even more important. So, our mortgage every month is $1,449.96. So I calculated this with 20% down, like we did, right? 3% interest rate over 30 years. Okay, so that's typical. That's what we're seeing right now. Our property taxes every month on this property is $279.50. The insurance on it is $100 a month. 5% maintenance is $120. So again, 5% of the rent. I'll come back to that. We gotta talk about that for a little bit. 5% vacancy. Again, $120 a month. Utilities, 0, which is amazing for multifamily. So total expenses per month, $2,189.46. Now the rent on this property is $2,400 a month, which leaves us with a profit, cash flow, of $210 a month. I'll come back to that again. First, let's talk about the 5% maintenance and vacancy. A lot of investors, again, say, what the hell is that? I don't know what that means. Again, so as we were sophisticated here for protecting our butt, we're doing it again now on a monthly basis. So every single month, we're going to put 5% of the rent away for maintenance and 5% for vacancy. So again, we're going to stash some money away in this same bank account, which we already had $2,400 when we bought it. So every month we're putting away $240. Again, in case the tenant moves out, there's a month gap, in case we got to fix something, taps break, the toilet breaks. We have the money there. We're not asking for more money. We're not scrambling for money. We're being sophisticated, and we're setting money aside every single month. So with all of these costs taken into account, we're cash flowing $210. And then you might be saying that's not too high for a duplex, and it's not too high. But again, it's turnkey, it's high end. So you're gonna get pretty much single family quality tenants in here, which is why I have it on my property of the week here, because normally I'm all about single family, but this one fits right in there. But let's look closer at that number, $210, right? Not too impressive. I think it's sweet, but some people might be like, yeah, it's not too good. Don't forget about the 5% maintenance and vacancy. Remember, that's still real cash flow. That's real money we're making every single month. We're just being sophisticated here. The bottom line is $210. But this is real money. So if you're factoring the 5% maintenance and vacancy and the real cash flow, you're actually making $450.54 a month cash flow. And that's still even including your property manager, which I actually forgot to put in there. Property manager cost, again, 5%. I'm going to squeeze them in here. It is part of the calculation. I just missed it here on the board. $120 again a month, 5%. That's what my property manager charges for my clients. That's a good deal. So again, so even with the property manager of $120 a month, so you can kick your feet up totally with this property, man. $450 a month for a high-end duplex in a sweet area. I want to be honest, the area right now isn't too bad, but not too good. It's kind of an okay area in Kitchener. There's way better areas and way worse areas, but this is an okay area for now. But the biggest thing about this property is the future upside, right? Right near the LRT, like 5 minutes from Fairview Mall. It's going to be one of the main LRT hubs. There's a lot of growth going on down there, especially on this end of Fairview Mall where this property is. So hang on to that property, and I guarantee in 8 to 10 years from now, you're going to be thanking me that you bought this. Okay? I'm trying to buy this property myself too. I'm not trying to sell you crap here. I'm trying to buy this property myself with some partners. So if you want to partner with an expert, give me a shout. But that's the property. Hope you enjoy it. If you're interested, shoot me an email. I hope you like these properties of the weeks here I'm doing every single week. See you in the next one.
Put your money in that real estate.
Hey, before you click another video, I want to give you some free stuff. You like free stuff, right? Click on the first link below this video and get my book, Single Family Investing Made Simple, absolutely free. Read as I walk a real-life client through the entire investing process from start to finish and document it for you. Click on the second link and get my other book, The Real Estate Investor's Handbook to Freedom. This book is a must-have for any investor looking to take their business and life to the next level. And last but not least, get my third and best book, 101 Single Family Investing Tips. Inside, you'll find 101 proven and tested investment strategies that I use every single day in my business in order to grow my wealth and manage my portfolio. I hope you take advantage of all the knowledge below, and don't forget to click like and subscribe so we can get more of these awesome tips. See you in the next video.